Assalamualaikum and hi everyone, especially for Dr. Zahra Sofia. Our group will presenting our group project which focuses about financial performance comparing of two company AIA Berhad, also Etika General Takaful Berhad in investment decision making. It is important to evaluate a company's performance to understand its ability to generate profit or return while managing risk. This is especially relevant and logical in takaful and insurance industry because these companies deal with long-term policies and exposed to various type of risks. One of the main tools that you assess financial performance is financial ratio analysis. Ratio analysis allows investor to compare companies more effectively and to observe changes in the company over time. This study also applies what-if analysis tools such as data table, scenario manager, and goal seek investors to understand more deeply how changes in key assumption may affect financial outcomes and potential risks. The first company is AIA Berhad, which is one of the leading life insurance providers in Malaysia. The second company is Etika General Takaful Berhad, which is a major takaful operator under the Maybank Group. Our objective for this report is to analyze and compare financial performance using financial ratios, evaluate changes from 2023 and 2024. And we also apply what-if analysis tool using Microsoft Excel to identify their financial strength, weakness, and risk. And we will recommend for a better company for investment. The analysis is based on secondary data which we obtain from the annual reports for both companies. However, this study, it shows limited because it relies on historical data, only covers the 2 recent years. This also to support a more informed investment decision in Malaysia's insurance and takaful industry.
For the year 2023, we analyze financial performance for two companies, which is AIA Berhad and Etika General Takaful Berhad, using liquidity ratio, profitability, activity, and leverage ratios. Starting with liquidity, Etika performed better overall. Its current and quick ratio were 1.33 times compared to AIA's, which only 1.05 times. For activities ratio, Etika was more efficient. It collect only 9.39 days compared to AIA's, where they collect it take times 37.82 days. In terms of profitability, AIA's performed better with return on equity 13.15%. Lastly, for leverage, Etika was less risky due to lower debt levels. Overall, in 2023, Etika's performed a better performance with lower risks, while AIA's performed better in profitability. Next, for the year 2024, Etika maintained a stronger position where its quick and current ratio were 1.36 times compared to AIA's, which declined to 0.86 times. This shows that Etika better for preparing to meet short-term obligations. For activity ratios, Etika continue to outperform AIA's. Etika's collection period improved to 7.73 days compared to AIA's, which is take more than 30 days. In terms of profitability, AIA's performed a better performance with return on equity of 16.63% and a net profit margin of 25.41%. Etika, however, maintained a higher return on assets. Finally, for leverage, Etika remained the less risky company with lower debt ratio but stronger interest coverage. In conclusion, for 2024, Etika remained the more stable and lower risk. Meanwhile, for AIA's, it has higher profitability with higher risk.
Hi, Assalamualaikum and good day. In this video, I will analyze the changes in total assets and financial positions of Etika General Takaful Berhad and AIE Berhad for the year 2024, focusing on the key factors that contributed to their asset growth and financial performance. Starting with Etika General Takaful Berhad, in 2024, Etika increased its total asset from Rm 3.3 trillion to Rm 3.6 trillion in 2024, showing a growth of 9.4%. The increase was mainly driven by the non-current asset, particularly investment, which rose to 12.1%. This shows that Etika strengthened its long-term investment strategy to support future revenue and expansion. However, Etika's current asset is decreased by 2.9% due to a significant drop in Takaful certificate asset, declined by 77.6%. At the same time, Takaful certificate asset increased by 38.4%, indicating a greater reliance on Takaful arrangements to manage risks. Overall, Etika showed a steady growth with a stronger focus on long-term investment while managing Takaful operations efficiently. Next, we move on to AIA Berhad. AIA recorded a strong improvement in its financial positions with a total assets increasing from 2023 to 2024. This indicates significant expansion in AIA's investment portfolio to support its long-term insurance business. AIA's current asset increased by 4.3% due to cash and cash equivalents, which rose to 5.7%. This reflects stronger liquidity management in 2024. Although other assets and current tax recoverables are slightly decreased, they were not significant enough to affect the overall performance. Overall, AIA demonstrated a strong financial growth supported by the high investment and the expanding insurance operation. In conclusion, both companies show a positive growth of assets in 2034. Etika focused on the long-term investment and managing risk efficiently, while AIA recorded stronger expansion supported by high investment, improved liquidity, and business growth. So that's all from me. Thank you.
So, what is what if analysis? What if analysis is used to analyze the profit margin and the revenue based on different scenarios for AI Berhad and Etika Berhad. In this case, we use three Excel tools. First, we use Goal 6, Scenario Manager, and Data Table. For data table analysis, we change the revenue from negative 10% to negative 5%, then 0%, 10%, and 5%, while keeping the profit margins constant. AIA Berhad has higher profit margin, so we know that the net profit is so sensitive towards the changes in revenue. While Etika has lower profit margin, so it has lower changes in net profit. So we can say that AIA is more sensitive and Etika Berhad is more stable. Next, we have Scenario Manager where we use three different scenarios. The first scenario, we use a best case where we use an actual performance, and then we have optimistic case where we use 10% revenue and then 2% for the market profits, and then pessimistic where less 10% revenue and less 2% margin profit. So the result, AIA Berhad increased more on optimistic scenario while dropped more on pessimistic scenario. Meanwhile, Etika Berhad is stable throughout different scenarios. Finally, we use goal stick analysis to determine how much revenue each company needs to make to increase 10% net profit, assuming the profit margins stay the same. The result shows that to achieve 10% increase in net profit, AIA Berhad require larger revenue, while Etika Berhad just need a less revenue. In conclusion, the what-if analysis shows that AIA Berhad can have potentials for higher growth and profit but comes with higher risk. Meanwhile, Etika Berhad offer a higher stability but lower sensitivity to changes. This helps investors choose between growth-oriented or risk-averse investment strategies.
To conclude, this study compares the financial performance of AIA Berhad and Etika for 2023 and 2024 by using financial ratios, year-to-year comparison, and what-if analysis. Overall, the results show that the both companies have strengths, but of course, there is a clear difference between profitability and financial stability. For both years, Etika General Takaful Berhad shows stronger performance in liquidity, leverage, and efficiency. The company has higher current and quick ratios, which means it is able to meet short-term obligations, also collects receivable faster, use less debt, and has better interest coverage. This shows that Etika has a more stable and lower risk financial position, which making it suitable for risk-averse investors who prioritize stability. On the other hand, AIA Berhad performs better in profitability. AIA Berhad records higher return on equity and higher net profit margin. The what-if analysis shows that AIA has a higher growth potential when conditions are favorable. However, AIA's higher leverage and weaker interest coverage indicate higher financial risk, especially economic downturns. In conclusion, Etika General Takaful Berhad is more suitable for investors who prefer lower risk and stability. For AIA Berhad, for people that willing to take higher risk for higher returns.